Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho, and right now I am going to be talking about DANG, which is China e-commerce Ding Ding. This is a retail mail order company. It's very similar to what you'd see at, I guess, from Amazon.com, except the company is based or situated right out of China. They sell their products within the China mainland, but the stock is traded on the U.S. stock exchanges. So it is an interesting opportunity from a fundamental standpoint, but regardless of the fundamentals, we're really here to trade setups. And this is a very interesting one because the stock has had a difficult time. It was trading all the way at around 11.75 just a couple months ago before it got all the way down to around this $4.50 area, which was just around a month ago. So all things considered, you know, this stock is pretty volatile right now, and it probably will pull back from that 200-day moving average. It hasn't really closed above it yet, so it's not a complete confirmation in terms of changing the direction of the trend. But, you know, it is China we're talking about. We are talking about a mail order company. It is typical to see mail order companies trade above average price to earning multiples. As you guys are well aware of, Amazon does trade at a PE multiple in excess of 50 PE. So it's not unusual for Ding Ding to be trading at above average multiples as well. So, you know, if you just ignore the price earnings multiple and just focus purely on the economic play we're dealing with, chances are the stock is ready to go substantially higher. Notice the break above that 20-day moving average, and it also coincides from the trend line that goes all the way from back in March of 2012. This is like this is one of those rare trading setups because it's still trading at around $6.38. It's trading at half the valuation it was at a couple months ago, and if it were to break above this trend line and continue to trade higher, I could easily see it getting closer to that 50-day moving average. But really, the 200-day and the 50-day moving average aren't really great targets because, again, they've already been met for the most part. Even if it were to go up a little higher and reach that 50-day moving average, it would only be like a 5% gain. So to only make the risk worthwhile in buying the stock is if A, the broader indices were to change their direction, and I mean the basic, the basic market sentiment behind the Standard & Poor 500, stuff like that, the broader indices, if they start to perform better, chances are it can sustain above that 200 and that 50-day moving average. Once it's above that area, it's easy to assume that the stock will go ahead and get closer to that 1150, 1175 area. Again, it's one of those high growth plays. It is relatively volatile, but if I wanted to make a lot of money on a market that's ready to rebound, this would be probably one of those stocks I would be starting to chase after. So again, that does it for me for today. If you guys have any questions, leave a comment right below the video. I'll be more than happy to answer them all. And I'll see you guys on Monday. And let's just see if we can make some more money in these trading sessions. Take care.